Well, top of the morning to you, folks. This is Dan Frio with your report for St. Patty's Day. So thanks for joining me today, folks. In today's episode, we're going to try to figure out what's going on with these things because we have to figure out what's the Federal Reserve is going to do at the next meeting. And to figure all that out, we need to go to the economic calendar and go through all the events happening today that will be affecting these things. So without further ado, let's get over to it. So my name is Dan Frio. I do this report actually 2 times a day to help you guys understand where the markets are going and heading and the whys behind it. We focus in on real estate because I'm actually a real estate mortgage loan officer. I'm licensed in all 50 states. I would love to help you if you're trying to maybe buy that first house or maybe looking to refinance. I would love to be your loan officer, and I'll give you all my information at the end of this video because our slogan, it's pretty interesting. It's one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? And is it something you can do on your own? Well, we're going to talk about that all the way at the end of this video. So stay tuned all the way to the end. So what we're going to talk about right now is what is going on in the markets right now that will be affecting these things. What the Federal Reserve does at the meeting on Wednesday, and then what is going to happen with interest rates, short-term, mid-term, and long-term. So let's get over to it. The news that we have out today so far is basically retail sales came in and they were pretty darn dismal, but the stock market's loving this. Let's go over and see what the bond market's doing right now. So the bond market is up 2 ticks, giving away a little bit. It was down, or it was up about 11 ticks a little bit ago. Actually going on. So let's get over to Rick Santelli. He can give us the news. Well, the only economic news that came in today was right through here. Retail sales came in. There's a whole different variety of these things. Then we had manufacturing. Manufacturing just completely fell off a cliff. Let's get over to Rick Santelli to make sense of this for us. And when he comes back, I'm going to give you market reactions, instant market reactions to all this. And I'll give you my 2 cents on where I think things are going to go short-term, mid-term, and long-term. So let's get over to Rick, see how the news looks today. If you have a retail sales increasing 0.2, less than expected, was it 0.3 or whatever the previous readings? I look at that as good news. If the consumer starts spending less, really help inflation. So let's get over to Rick to see his take.
Rick Santelli is standing by at the CME in Chicago. And Rick, we've been awaiting these numbers. Take it away.
Yes, we're waiting, obviously, retail sales. We also have Empire Manufacturing. On retail sales, do remember, last month was on the weak side. Here we go. Our February read, this is the advance on retail sales, up 0.2 on headline. That's a real disappointment, up 0.2. Now, it is the best of the year because we haven't had a positive number, as I referenced. We were down 0.9 in January. That was the worst, basically, in close to 2 years. You have to go back to March of 23 to find a more negative month-over-month change. Many were expecting a better bounce. And if we look at X-Auto, hold on. Minus 0.9 now becomes minus 1.2. Which equals where we were in November of 22 to find a bigger negative month-over-month change here in July of 21.
So this is telling me the consumer's getting strapped, folks. And a lot of people have been saying this, but you still have wages that are still outperforming inflation. You still have the jobs reports. It still has 200,000 jobs being added each payroll. So as long as the consumer can slow down their pace of spending, I think this is going to be a lot of good news, especially once the tariffs kind of wiggle their way through the systems. We're not going to know really how any of this concludes until we get through it. But this is a lot of good news. The manufacturing piece is the piece that really, I guess, is frustrating a little bit because I am on the side, and I apologize if I'm on the opposite side of you with this, but I think we need a strong manufacturing country to get through this. I'll give you a little bit of feedback on who I am and where I'm from. I'm originally from a small town called Follinsby, West Virginia, and it was basically coal mines and steel mills. That's all it was. Towns north of me and towns south of me. It was steel mills and coal mines all the way up and down the river. In the 80s, when China started dumping steel, it just decimated. So, the progression, if you were a kid back then, you'd go to high school, you'd go to college a little bit, then you go back home and you'd work in the steel mills and the coal mines. That's just what you did. Most people didn't really go to college, but that's what we did. Okay. So, when the steel mills and coal mines just went under, nothing to do. So I fortunately went to college, got a degree, and moved to Chicago. A lot of people stayed back, and it's regentrifying itself now, but we don't have a manufacturing. And I had this complaint and this argument for years. like, okay, if we go to war with somebody, who's making our steel? China? Okay, we're going to go to war with China and Russia, and they're making our steel and our equipment. Not a good role there. We have to be independent when it comes to manufacturing and resource. Just how the country's going to operate. Well, that's my point. You guys might have counter point of views. You're more than welcome to share that down below. But that's my thinking behind this and the whys behind all that. So let's go back to Rick Santelli, and so he can conclude this, and then we can get through the rest of the news.
Now let's strip out autos. Up 0.3. That's a pretty good number. That's about what we were expecting, up 0.3. And last month's minus 0.4 now becomes minus 0.6. Minus 0.6 would equal Jan of 24. To find a bigger negative, you're in March of 23. So rear view mirror, really nasty numbers. Bounce back is not as much as many would have thought. Let's look at ex-autos and gas. We continue to improve, up 0.5%. This is the first number that actually bests expectations. My numbers were looking for up 0.4. In the rear view mirror, also a bigger negative. Minus 0.5% becomes now minus 0.8. Minus 0.8 in the rear view mirror, with the worst going back to March of 23. And if I look at up 0.5%, that equals where we were in December. To find a better number, you're going to June of 24. So that's a pretty good number. And finally, let's look at control group, which is the core retail sales. And this is actually a good positive. Watch rates go up on the core, up 1%. That's 2.5 times the 0.4 we were expecting. And in the rearview mirror, a bigger negative revision. But looking at the bounce, it negates it. We went from minus 0.8 to minus 1%. Now we're at positive 1%. I also referenced we had Empire Manufacturing. I like this one because it's a March number. Minus 20. I was looking for minus 2, maybe minus 3. Minus 20 would be the worst month-over-month change since January of 24. That's a little less than a year. Interest rates went up a little bit on the better control number. They came down a bit. So we're at 4.30 in a 10-year. That's about down 1 basis point. That's a couple basis points better than it was before the number. And you are seeing just a smidge of a better scenario in the pre-opening equities, at least as evidenced by Dow futures. And I do want to point out one thing that Mike Santoli pointed earlier. If you looked at the savings rate and the personal income data we recently received, it was the best since June of 24. Okay, so mid-year last year. So we do have some dry powder there. It looks like in some ways it was put to work, but I would say that in the months ahead, there's a possibility that we could kind of boost some of those numbers a little bit higher. Back to you, Becky and Joe, and happy St. Patty's Day.
What he was saying is right at the end, he said the savings rate for people is still good. That's what he was saying. There's some powder there because if retail sales fall off a cliff, people still have the money. That's what he's saying with bank accounts and so forth. So the health of most consumers right now, this is basically also where the pendulum swings, where the rich are getting richer and the poor are getting poorer. And it's that middle class, folks. It's the manufacturing base that we have in this country. You know, think about it. If you're a kid in your 30s and 40s, look at when you were a kid. A lot of things were being built kind of in the area that you're looking at. What is it now? It's basically these big warehouse buildings that just store stuff. So we're an importing country. We import all the stuff. We put it in these warehouses, and then we sell it from there. We need to be a manufacturing company, and that's, take my word, folks, that gives a country its strength as well as its resource. That'll be my political campaign right now, but judge a book by its cover, folks. So let's get over to how this is projecting in the markets right now. So let's get over to the stock market. Stock market's loving this data. It's up almost 200 and it's over 250 points right through there. We have the indices, the equities across the board in the green. We have oil in the green as well, but it's well below $70. We have the 10-year Treasury at 4.30. I keep pointing at that. We have to have it at 4.30 or below. When it starts getting above there, it starts getting a little tricky on where that next kind of peak point is there. Let's get over to crypto. Let's just take a glimpse at this. 82. This was 106 about a month ago. So that's getting clobbered through there. So let's recap things that we're looking at right now. It is mortgage rates. They're going to come down just a little bit, or they'll just stay steady today. We're having right through there. CME FedWatch tool saying the Federal Reserve is going to do what in a couple days? There's 99% chance right over my head they're going to do absolutely nothing because the federal funds rate right now is 4.25 to 4.5. It's going to stay there right through there. So we're seeing that. Like I said, the equity markets are loving this stuff. If we go over to the economic calendar we have for the day, the Rick Santelli broke the whole thing down. You can look at the numbers where they were, where we are. But then let's see if there's anything in the upcoming days that really should, stir up the pot a little bit. On Tuesday, really nothing there. And then on Wednesday, we have the Federal Reserve coming out. They're going to tell us what exactly they're going to do. I don't think it's going to be a surprise to anybody, but we're going to see what the verbiage is that they have for it. So let's get over to the bond market. Like I said, let's see how bonds are doing right now on all this. The MBSs are up 7 ticks. I'll take it. It beats down. So if you don't understand what this is, we monitor rates here. Okay, so that's what we do. And this is how we monitor rates. This is a mortgage bond that trades on Wall Street. The yield on this thing is the biggest component or the biggest matrix in your mortgage rate. Okay, so that's why we focus in on this. What you have to do is you have to figure out what the yield is on the price. Okay, so most other bonds when they trade, like the 10-year Treasury that we focus in on as well, up there it gives you the yield, and then on the MBS it gives you the price. Not sure why they do that, but let me explain it to you. When this number goes up, that means rates are coming down. There's a yin-yang effect. Just think of it that way. If one's up, the other's down, okay? So if this market is up in the green, that means rates are coming down. The bigger the number, the bigger the adjustment. So right now, this might be 1 or 2 ticks over through here. We might give back, what we gained on Friday, because this is what happened on Friday. Mortgage rates went up 0.03. We might give that right back today. So no market movers today, and there probably is not going to be any market movers on Tuesday. Wednesday, we're just going to wait for the Federal Reserve to come out and tell us what exactly they're going to do. So that is our report for today. But like I said, the markets, stock markets are liking this thing. The bond markets, they're giving them the thumbs up as well. So not a really eventful day, folks. I hope we just make some money in the stock market. That'd make me happy. So without further ado, let's get over to who I am and what do I do. But first off, before you turn the dial or before you do anything, you got to do this thing. Okay, so here's what this is. Did you sign up for the do not call list? Well, if you did, I did. It didn't work very well. Hopefully this thing works a little bit better. What this does is it stops trigger leads. Now, the first thing you're going to say is, Dan, what in the heck is trigger lead? Trigger lead is this. When I pull your credit or any bank pulls your credit because you're applying for a mortgage or a car loan, okay, your data now can be sold. I just pulled a client's, he keeps updating me on this. I pulled a report on a client on, I think it was Wednesday. He's gotten over 50 calls so far, 50 solicitation calls, people promising him the world. They don't even know who he is. They don't even know what he's looking for, but they're going to promise him the world. If you want to stop that, you want to stop your data from being sold, do this. Just go to optoutprescreener.com. It's free. I didn't create it. The credit agencies created this thing, so don't pass it up, folks. So now, who am I and what do I do? So we have a slogan here, one application, one credit pool. We're going to shop your loan to over 30 different lenders. Now, how do we do this, and can you do it on your own? You can do it on your own if that's your full-time job, probably. So here's what we're looking for. We're looking for people that need our help, that really need our help. So if you're out there and you're like, okay, I know how to do all this, and my only goal is just to find that lowest rate, God bless you. Go out there and search around. Okay, what we want to do is we want to partner up with people that really need our help. They don't know how to buy a house, and they're like, okay, help me through this whole process. Or they bought their house, and now it was confusing when I bought my house. Now, how do I refinance? And can I refinance? And what program can I refinance? And these are all the things that we're looking to help you navigate through. The cool thing is I'm licensed in all 50 states as well as Puerto Rico, and we can offer you quotes up to 30, maybe even over 30 different lenders. So now here's how it works. I work at a federal bank. Now, there's only a handful of federal banks in the country that do this, okay? We're a federal bank that gives me licensing throughout the whole country in Puerto Rico. But the cool thing is the bank thought, okay, wonder if we can get ourselves affiliated with other banks so we can offer more and more and more products to our consumers. What we did is we set up with 30, I think we have 33 other lenders right now. When you put in your application with us, it's one application, it's one credit pool. Now we're offering you programs, rates, and everything from us, as well as all these other lenders over here. Now there's programs over here that are like bank statement programs. So if you're an investor, if you have a lot of rental properties, you might need a DSCR program. If you're struggling in this market right now, you might need a reverse mortgage, or your aunts, uncles, grandma. mom, dad might need a reverse mortgage just to understand it and help them out. Or if you're out there looking to maybe refinance, you bought that first house and you're like, I'd like to refinance, but man, those closing costs were a lot. And how do I do this? That's where I hope to do for you. So visit me at therateupdate.com to learn more. Here's what we do. You can put in your application right up through there. I usually would rather talk to you first. So if you want to schedule a consultation, you can do that right through there. Or if you scroll down to the bottom of the screen, you can find my 800 number as well as our my email address. Scroll down to the bottom of the website. You're going to see 844-775-5626. You can call there, or you can reach me personally at dan@therateupdate.com. Please send me your questions, concerns. You need some help through here. If you just have a comment, please leave that down below. You really need my help. Send me an email. Give me your story. Give me your contact information. So thanks so much for watching, guys. God bless. Have a fantastic St. Patty's Day. And I hope to see you back here at the closing bell and hope you learn something today. So thanks for watching, folks. God bless. Have a good one. See you later. Bye.